Okay, I want to talk about Sarbanes-Oxley that occurred in 2002 as a result of some serious frauds, and uh, the frauds being Enron, WorldCom, Tyco, to name a few. But investor confidence really suffered, and so the Congressman Sarbanes and Oxley came up with some improvements to the system in hopes to help the investment market. And our economy is very much dependent on that. So some of the improvements include the fact that now the executives of the firm actually have to certify that the financial statements, that they're not aware of any fraud, or that they know that the financial statements were reliable. So there's a lot of people that are, say, management majors that are going to be executives. They have to have a pretty good working knowledge of the accounting. The other thing that's required now is a fraud hotline where people can report fraud anonymously, and that's helped to uncover some issues since 2002. Internal control reports, that's new, and that is where I've got it down here in 4.3. If you look in your content, there's an example of a report, and it's basically management's responsibility to make sure they do have an adequate internal control system. That it's not left to that, though. The external auditors also have to provide an audit of the internal controls, and I have an example of the report they would write. That's on in 5.4 of your course content. So they have to audit the controls to make sure that they are functioning effectively. There were some other improvements to the audits, as well as the Sarbanes-Oxley has set up a new agency called the Public Company Accounting Oversight Board. They call it Peekaboo for short. And let me go through some of that with you. Some of the improvements with the audits is in the company structure is such that the shareholders now have an audit committee that is overseeing the board of directors and the executives. This audit committee, the internal financial police, if you will, have to have, let's say, have a good working knowledge of accounting. And they report not to the executives. They're independent, so that they're basically overseeing it, seeing the controls and the financial reporting. These external auditors, they're now being required to be a little more thorough in their audits in terms of trying to detect fraud. Now, there's no guarantees against fraud, but they're at least having to do more in terms of trying to uncover fraud. And speaking of the audits, these external auditors, they're CPAs, which is a professional license, and they have a higher ethical standard in which to abide by. But they will do tests of the accounting records. They don't look at everything. You can't. There's just too many transactions. But through this testing and review, they will come up with an opinion. And there's various types of opinions. You can read about them here. But companies hope to get a unqualified opinion, or informally called a clean opinion, so that that's basically saying the financial statements were prepared in accordance with the rules. It doesn't tell you that they're exact, or it doesn't tell you that it's a good investment. It's just saying that they followed the rules, and that those numbers are reliable. I want to scoot down here to give you, if you look at 5.3, there's an actual auditor's report of American Eagle, and it basically describes what they audited, how they did it in general, and what the result was. Lastly, I just want to show you here briefly actually the system as a whole, and the new addition is this Public Company Accounting Oversight Board. That's right here. That's what's new. But the way the system is supposed to work, you've got the SEC. They're the ones who have the ability to basically prosecute somebody through the Justice Department. They've delegated the rulemaking to the FASB, which is Financial Accounting Standards Boards. There's the one who have come up with these reporting rules. The rules are used to prepare the financial statements, but the financial statements are prepared by the accountants of the firm. They aren't prepared by the auditors. In fact, that's that would be a flaw. You do not want the auditors to be involved with the actual record keeping. So these financial statements are used by all sorts of users. The list is plenty. You would be one. When you're looking for employment, you should ask to see the financial statements of the company so that you can get a good understanding of what that business does. These users should have confidence in these financial statements because they've been audited, and there's this audit opinion, and these auditors are required to follow auditing rules that are overseen by the Peekaboo, and it used to be another group called the AICPA that was responsible for the auditing rules. So that's how the system is supposed to work, so that the users have confidence and are hopefully then willing to invest in the corporations of the United States.